Welcome back to Risky Business, a show about making better decisions. I'm Maria Konnikova.
And I'm Nate Silver. Today on the show, we'll talk about the ongoing wildfires in Los Angeles, and we'll take a listener question about Elon Musk, the river, and the village.
Before we get into the wildfires, really serious, weighty topic, incredibly important. Let's talk about something a little bit lighter. Nate, you just got back from a trip to Tokyo and Seoul, so you were halfway around the world.
Yeah, I don't know if I'm 15. We had this debate, my partner and I, can you really be 15 hours ahead? Doesn't that mean 11 hours behind or 9? I can't even do the fucking math. But yeah, I'm a little guy, a little bit of the lag, as we say.
Welcome back to New York, and we hope that your jet lag will evaporate soon enough. But tell us a little bit about that trip, just because I think it's absolutely fascinating. Two great cities, such a fascinating part of the world, but also one where you had to make a lot of travel decisions, right? A lot of risky decisions.
Yeah, so one thing is, first of all, I love both cities. We were lucky enough to have a good Korean-American friend that we traveled with and caught up with another friend in Tokyo. So we had family and friends to help. No, you wouldn't know the other friend.
Okay. Yeah. Not our mutual poker friend who lives in Tokyo.
No degenerate poker playing this. Our degeneracy was merely no pachinko parlors. We just ate a lot. Everyone's like, oh, I went to Asia and or Europe, and actually I lost weight because I walked. So it's like, nah.
I always find that's bullshit. I'm like, oh, just give me food.
They are in some ways, Japan is kind of a more risk-averse society than other countries. I'm not sure if I want to, as Korea is in certain ways too, but so apart from the food, which was wonderful, seeing these two countries back to back, where on the one hand, if you look at the per capita GDP of Japan, this may not be exactly precisely right, but it's basically the same as it was in the 90s. So the country has not really grown for 40 years now.
That's crazy.
Whereas Korea has now, per capita wise, caught up with Japan or surpassed it. And feels more modern in certain ways. Certainly, Tokyo is a very comfortable place to live, but Seoul, the English they speak tends to be a little bit better. It's a little bit more modern in different ways. I think Korean culture, to make very broad white guy stereotypes, this is emerging, right? You have all these Oscar award winning films, and the art we saw was interesting, and it's a culture that's gone from being, for a long time, a very poor country to being relatively wealthy in a hurry. What's interesting now is that both countries, but especially Korea, have these very low birth rates, which is not something we've talked about before. I guess neither of us have kids, so maybe we're part of the problem, right? But I don't know, just again, dumb white guy observations to arrive in this country that just has all of a sudden found itself as being kind of a big player in the region and on the world stage. But now it's I think we're comfortable here, and maybe that's enough. It's just interesting. I'm not sure how to put this without having too many stereotypes, I suppose.
Yeah.
But to see the contrast back to back was fascinating to me.
I'm sure it was. So I've actually never been to Seoul, but I did last week watch Maybe Happy Ending on Broadway, which is a play about two robots in South Korea who end up falling in love and taking a trip to Jeju Island. So bonus shout out to poker players who like to play the Jeju series. There is a poker scene in Korea as well. So I felt like I was missing out on your trip, so I had to vicariously make it happen on Broadway.
Yeah, we did travel only to those two destinations, Seoul and Tokyo, so it's a little bit weird after a long year with elections and the podcast getting started, whatever else, to relax by going to these gigantic cities. But I think our group, just the three of us, we had planned maybe go to Kyoto or maybe we'll go somewhere else in Korea or both. And I think I advocate for having fewer destinations, right?
I'm actually with you. I think this is a good, we did our GTO travel episode, and I think this is actually what I find. I think travel, is different for different people, but one of my travel tips is don't put too many destinations on there. And I actually prefer to go to just one place and stay there. And I know every single person's different, but for me, I think that's max EV for a trip that you'll really get a lot out of. On that note, let's talk about the LA fires. Obviously, much more serious, much heavier topic, but I think it's a really important one for us to discuss because obviously there are so many topics of risky decision making, risk perception, how we act on risky information. And I think we want to talk about it from two different perspectives, right? One, and this is something we've talked about on the show before, but I think it's incredibly relevant and kind of relevant for the future and for the entire country, not just for California, which is the insurance angle, right? And the future of the insurance industry, how to think about risk from that perspective, both as the insurance company, but also as the individual purchasing property, purchasing or electing not to purchase insurance. And then I'd also like to talk about kind of the individual psychological risk perceptions here, not just the insurance component, but what happens if you're in one of these zones? How do you handle risk? How do you respond? I think that those are two related but distinct areas, and I think that both are really interesting and core risky decision metrics. So let's start with the insurance angle. We've talked about this before. In California, not just in California, all over the country, Florida, some other states, insurers have been pulling out of regions where the risk of disasters, natural disasters, has risen. And that is a lot of different parts of the country. And in the last few years, insurers have started using different models, right? Because insurance is a backwards looking business in general, right? You look at risks and then you try to kind of extrapolate, and that's not working anymore with climate change, with all of these things happening. And so, especially, I don't know whether all insurance companies are doing this, but I know that a lot of insurance companies and a lot of the insurers in California have started using AI and other things to try to change their risk models to take into account the fact that the world is changing. And they even flagged the Palisades as an incredibly, dangerous area. And so some of those you can't get insurance anymore. So yeah, let's talk about it. Let's hear some of your thoughts on this process and on what it means.
Yeah, so in addition to the challenges with doing any type of statistical modeling, which is always more difficult than people want to let on, if you have disaster risk that's affected by climate change, then you don't really have an empirical baseline, right? You're probably doing more elaborate forms of modeling, or maybe you're actually trying to do some climatology or whatever else, right? But it's a lot of educated guesswork, I guess I'd say, right? From what little research I've done on, what's the effect of climate change on particular types of disasters, I think it's not quite so linear as you might assume. Yeah. It's probably bad. But, some of the models say, for example, that the hurricanes, there are fewer hurricanes, but they're more severe. Probably worse net from a climate modeling perspective, right? To have fewer but more devastating storms, and we had some this year, is probably worse. But, if you're guessing, you get into different problems. You also get in the issue that, it's not a thing where, I don't know, if you have some home insurance where my home gets broken into or whatever, that's more stochastic and random. Not perfectly. There's probably some correlation where there's some gang of, I don't know, bandits or thieves or whatever. But if this disaster all comes at once and not all of Los Angeles, we should emphasize, by the way, LA is a very large huge area. Yeah. I mean, I was very briefly in LA on the way home, and, we were in the part of LA which wasn't on fire. But it's a very large area, and certainly the expensive area too. And so one issue is the modeling issue. So
yes, so we have these issues of modeling, but even with those problems, I think that something that you just started mentioning is when you have risks that are highly correlated, right? It's very, very difficult to try to figure out, okay, how much should I charge in premiums? And in some place like California, you also have another thing where there's regulation, right, where insurance companies are required to have a certain number of reserves. Until very recently, they couldn't raise their premiums as much as their models said they needed to raise their premiums. So instead, they just said, okay, fine, fuck it. We're not going to insure these places. You can't renew your insurance. You can't do anything. And that puts a lot of people in very difficult situations. And the areas that are burning in LA, sure, you have the Palisades with some, incredibly expensive housing, some of the most most expensive real estate in the country. But then you also have parts of, Altadena and other parts of LA where there are lots of people who are poor, who have been there forever. And, what in the world happens, right? When you can no longer, when either the insurance says we won't insure you, or the premiums are so expensive that you're like, I can't afford this anymore. What do you do? And there are families that chose, like last year, right? I'm not going to renew my insurance coverage. And then this happens.
Yeah, look, I mean, this has been in the news a lot because of like these beautiful, glamorous properties in like outside Malibu and the Palisades burning, for example. But like, yeah, it's affected all types of areas of LA, and LA is like more of a middle class, kind of working class town than I think some people realize. Really, right? The average per capita income isn't that high. Look, so yeah, there are these three issues like we mentioned with insurance. One is that the modeling itself is difficult and involves a moving target. A second is that there's some degree, maybe less so with like home insurance, but some degree of adverse selection is a term where if you're someone who buys insurance and not everybody does, and maybe you're more of a risk than the model would let on, right? You're buying insurance. I mean, the analogy I give is like, if you have like an all-you-can-eat buffet, right? There is adverse selection for who comes and eats at the all-you-can-eat buffet, right? Probably if you don't want to have an all-you-can-eat buffet set up outside like a sumo wrestling tournament, for example. That's another
That would be a
issue.
losing business model.
Yeah, and it also means that if, for some people, the expected value of insurance, I mean, this is complicated. On the one hand, it has to do with like hedging catastrophic risk and diminishing marginal returns, right? Like if your home is worth $2 million and your net worth is $4 million, so it's half your net worth, right? Well, then probably in principle, there is negative expected value for most forms of insurance in terms of like the pure dollar amount, right? The risk of your house burning is supposedly lower than the premium that you get from it. But you'd much rather pay the small amount than have to lose half your net worth in one inferno, basically. But yeah, the third issue is that California is a state with lots of, I wouldn't even say well-intended regulations necessarily. I mean, I don't think it's the most economically literate state, frankly, or the policymakers are especially smart, frankly. But, based on a combination, including, by the way, some of these are things that like are ballot measures passed by, it's a state with a bunch of referendum, right? Everything goes to direct democracy. People like me might think this is kind of wonderful in the abstract. It's ruled by true democracy, not ruled by the expert class, et cetera. But like, it creates issues. I believe the rule is that basically any insurance increase has to be appointed by an insurance commissioner in California, which is like a regulated industry, instead of kind of letting the market take care of it. So yeah, these insurance companies are correct, I think, to say that if you have limits on what we can charge and we have negative expected value, then fuck you. We're not going to offer insurance in the first place. And that's a rational reaction, I think.
It is completely rational. I mean, you have to remember that insurance companies are also businesses, right? They're not pro bono organizations. This is not like a federal relief fund that is there to catch you. It is something that, even if the returns are low, you need some positive returns. It's not a business that's going to be a money-losing business. And so you understand that. But then you end up in this situation where, like, what the fuck do you do, right? If I am a person who, has always lived in California and who lives in California and my house burned down, what do I do? Right? Like, it puts people in these impossible situations, and it's horrible. Like, I'm just a little bit of, editorializing, but like, we shouldn't be in a situation where people are, sharing GoFundMe campaigns for everyone, right? Like that shouldn't be the case. There should be, especially if you're somewhere like California where, this is a thing, they should figure out a way to make this work, or not, and just not let people live there. That it's kind of one of these very, very stark contrasts.
Yeah, look, I mean, there is a backup state program called FAIR, F-A-I-R. The mechanics are a little bit complicated, It looks like if it runs, I mean, you can buy a premium, right? It's not particularly cheap. If Fair overall runs out of money, I think there's some pocket they're taking from private insurers who are selling insurance in California, which ultimately makes insurance more expensive to sell in California. And so, it's one of these other perverse incentives. But there is that option at least available up to some limit. I think up to $3 million worth of coverage. So let me be a little bit of the turd in the punch bowl for a second, right? You don't see a lot of efforts to be honest and forthright about the fire risk here, right? With the way different properties are built and the amount of distance between, for example, the amount of distance between this shrubbery, what's called chaparral or chaparral? How do you say that?
Yeah, I don't know. That's one of those words that I read and never say out loud. So
I've never said that word out loud, have I?
No, I have good reader syndrome. There are so many words that I... Chaparral. Chaparral?
Let me... Chaparral. I don't know if I like how that AI bot said that. But you have a lot of this kind of shrubbery, and these are not like forests per se they're catching on fire, right? I mean, if you've been to California, maybe get a little bit of this in Vegas, but not quite, right? But you have this kind of dry, bushy area, right? It's not super dense, but where fires tend to spread pretty fast, right? They're not doing a lot of cultivation. You can do controlled burns in areas that are fire risks. There is reluctance to do that. Whenever you do one of those things, you have to go through 5 years of regulation and environmental studies and whatever else, right? But there's not a lot of honesty about the way these properties are designed to mitigate fire risk. And maybe there will be more now, right? But and that kind of puts homeowners at risk. So if your home can be covered by insurance, then that can create a moral hazard. It's the other famous insurance term along with adverse selection, right? Where if I am covering, the classic example is the bank bailouts, right? Where if the government steps in and prevents whichever companies, Morgan Stanley, I don't want to accuse particular companies. I'm sure all the big Wall Street firms had something's involved, right? But if they're going to come and bail you out, if you fuck up, then you have an incentive to make riskier bets, right? And I don't think homeowners individually are quite as calculating as the banks might be. But I almost say as a rule that if you create a rule where there is financial upside to basically what we term an exploitative strategy in poker, right? Then people will exploit that in the capitalist system. People will build right up to the edges, kind of figuratively or literally. And so that can be a problem too, potentially.
Yeah, I think this is a good kind of pivot point to looking at this from the individual side as opposed to from the insurance company side, because people, when we talk about this all the time, people are not rational when they're evaluating risks, and they're especially not rational when it's a personal thing, I've always lived in this area, right? or I want to do this, and sometimes they're gamblers, right? Sometimes they're actually risk seeking in this particular case because they kind of take the gamble that, oh sure, there's a risk of a fire, but my house isn't going to burn down because it hasn't burned down for, however many years. And there are properties. So one of the places that burned, one of the businesses that burned down in LA is Real Inn, where I've been. You've probably been there too. It's on the way, kind of on the road to Malibu. There's only one road, by the way, which is also not great in terms of natural disaster and trying to get away and trying to get the fuck out of there when shit's burning, which is why people have had to abandon cars and bad things have happened. But Real Inn burned down, and it was there for I think over 35 years, right? That specific business. But if you've been there for 35 years, you think, oh, well, yes, there are fire risks in Malibu, blah, 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 but we've always been fine, right? So we're going to just continue to be fine. People do have this tendency to be ostrich-like, right? Ostriches are the ones that bury their hand in the sand. Do I have the right analogy? And you want to, when it's convenient to ignore these things, you want to ignore it because you want to be comfortable. You don't want to make the tough decision of saying, okay, you know what? We need to sell our house and we need to move to a different part of the state. We need to move all the way out of California. People don't want to make those hard decisions. And so instead of doing that, they're just going to fudge the risk in their mind and take something which to us looks like, an irrational or very gambly decision, which might not actually align with their risk preferences, right? I doubt that all the people who had houses that burned down were risk seeking. Some of them might not have cared, right? Like some of the, if you're very wealthy and you just say, okay, if my house burns down, fine, I'll just rebuild, right? Like that's one way of looking at it. But I'm talking about like the lower middle class people who aren't thinking that way. They might appear risk seeking because of that choice, but in their minds, they're not, right? They miscalculate willfully, if that makes sense.
Yeah, I mean, there's a famous story from my book where Elon Musk sells his first company, buys a McLaren sports car, which is worth like $1 million or something, and then crashes it on the way to the pitch meeting, and he doesn't have insurance on this car, right? In part because he, I think, thought he was invincible, but also he might say, hey, look, I just sold this company for $17 million or whatever it was, and this car is worth $1 million. So like I am far enough along that diminishing returns curve, right, where I don't kind of care either way about $1 million, right? I'm not going to pay, because insurance, again, ought to be in principle negative expected value in a narrow sense if you don't account for diminishing returns, right? And he's at the other end of that spectrum where it's like, okay, well, who cares, right? I'll just wire another $1 million to the McLaren dealership and buy a new car, right? It doesn't really affect me much either way. And so like, so I don't think it's necessarily, I want to be very careful, right? But like if having your home destroyed by an earthquake or a flood or a fire is something where you'd make out okay, right? Notwithstanding the psychological damage and the damage to the artifacts and the belongings and your pets and whatever else, right? And you're safe. Like it may not be rational to buy insurance.
Yeah, I think, well, that's why I try to distinguish between the people who can afford to lose it and the people who can't. And I'm wondering if as these things, because we know with risk perception, right, so much of it is personal experience and what has typically happened to you or to people you know. And I wonder as kind of these risks are spreading to communities that, before thought that they were relatively safe, as we have so many properties that have been destroyed, so many people that have been displaced, if that's going to start changing, right? Like I'm in Las Vegas right now, and I've heard multiple conversations around Las Vegas about, is Las Vegas going to see an even greater inflow of Californians than it has in recent years after this, right? Are people going to actually change their risk preferences based on the newly available data? There are some Hollywood executives who are starting to look at building studios here, right? There are a lot of people who are saying, okay, this might have been the tipping point. And I think that that's also interesting to observe and to see what will happen.
One thing I think you sometimes see happen is that when you have these tumultuous and tragic events, they accelerate processes that were already underway, right? So one example is that you have the pandemic. Actually, a bunch of these with the pandemic, right? You have the pandemic, people stop going to the movies, and then the movies recover, but to some substantially lower baseline, right? And people are just kind of calculating, well, you know what? You have so many ways to watch a movie in your beautiful home theater or whatever setup that, like, it's just a special occasion kind of thing now. And, like, that's kind of a permanent change that maybe happened in 2 years when it would have happened in 10 years instead. Look, California has been losing population. It's going to lose, I think it's lost an electoral vote and will lose more probably at the next redistricting process. So in a relative sense, relative to the rest of the country, it's no longer a growth state exactly. You have movement all over the West, right? To Nevada, to Idaho, to Colorado, also like Texas and Florida, which are fairly good substitutes for it, right? So yeah, I don't know. I don't know how many people have actually been put out of their home. But you can imagine, I mean, I don't know. When I've been to California recently, I mean, it feels like a little bit sleepier, right? I don't think New Yorkers have the jealousy of California that they kind of once did. Maybe you do have vice versa a little bit. I mean, you do have Silicon Valley that is still booming, at least as an industry, right? I don't know as a town, but like, that's still attracting talent from like all around the world. And with AI being another potential boom, then that seems not to be going away very much. But yeah, I don't know. I don't think I'd want to live in
No, it's definitely changed the way that I look about it, that I look at it, that I think about it, because there was part of me that always thought, maybe at some point I'll live in LA. And at this point I'm like, no fucking way, right? Like why would I do that? Certainly would never buy property there, because I think that the risk reward, I don't think it's a rational decision right now. And a lot of people are going to disagree with that because everyone's risk preferences are different and everyone's, decision matrix is different. And I think that that's important, right? Right now we're talking about personal EV calculations. One final thing that I wanted to talk about, is the actual experience, of fires, right? Because there are people who died, and some of those deaths couldn't be prevented, but others were because of just frankly absolutely asinine decisions where like you decide that you're going to pick up a hose and protect your home from the fire, which is endangering you, endangering firefighters. It's when people say evacuate, you're supposed to evacuate. And I think looking from the side, you say that is really asinine. But for some people, if they've never experienced a fire, right, if they've never seen how quickly fires can spread, it might have seemed rational. They might have been like, oh, the fire's a block, like it'll be fine, right? I have time. And what you don't understand because you don't have kind of the experience, the visceral experience of it, and your brain can't comprehend it when people are telling you go now, is just how quickly fires can spread. Like it is insane. You remember last year we had a fire in our backyard in New York, right, when there was an explosion in the middle of the night of batteries and of a restaurant, and our building almost burned down. But I just remember from the moment of the explosion to like the fires being taller than our windows, which is a fourth floor apartment, it was seconds. Right. And I was like, holy shit, like it went from what's going on to we need to get out right now, in like under a minute. And so I think that, and that's not even a wildfire, right? That was a very different situation. That was an electrical fire, but I think that people's risk in the moment, in that hot situation, your risk assessment can be off and you can say, oh, I have time, I can do this, I want to protect my home. And so you just lose perspective that actually the only thing that matters is your life and the life of firefighters. And so people make just really, really stupid decisions, which is why I always say, like, you need to, in hot situations, this is like poker too, right? And like being on tilt in poker, like you need to think of it in advance. Like, how am I going to react to this situation? Because in the moment, you're going to make a bad decision if you don't know what you're going to do, if you haven't thought it through. You might think that you'll be able to think clearly, but you can't, right? When you're emotional, when you're stressed, clear thinking goes out the window unless you already have a plan of action.
Yeah, and it kind of happens fast. Right? I was trying to explain to someone the other day who has not played much poker about how, if you're playing a 5-10 no limit game, right, mm-hmm. and like, and the effective stacks are like $5,000. Well, how do you ever get kind of like the whole $5,000 involved when there's only the $15 in blinds to pick up initially, right? Maybe it's not the best analogy, but the point is that like danger can happen quite quickly. And you don't necessarily have a moment to like kind of catch your breath, right? I mean, there are different cases with hurricanes, which is something that we deal with a little bit more on the East Coast, mm-hmm. although not in New York like we would in like Florida or something like that. Like there, you do have some advanced warning, right? It's not like the hurricanes come exactly out of nowhere, but you have the risk that like, if you evacuate people too early. In New Orleans, when Hurricane Katrina hit, there had been kind of a long history of New Orleans having good luck with storms that were bad, but not as bad as feared or forecasted, right? Mm-hmm. I think the literature, I wrote this in the first book of mine more than 10 years ago. I think the literature is pretty consistent that there are real consequences to false alarms for any type of natural disaster, and people really feel invincible if like, oh, last time you said it was going to be bad, and it wasn't, right?
Yeah, and I think that it creates this, it's kind of, coming full circle to what we were talking about, it creates this perverse incentive where you personally feel more invulnerable than you should because you've gotten away with it in the past, right? Like California, well, my house hasn't burned yet, right? You've told me to evacuate before and everything was fine, so I'm just going to be comfortable and it's all going to be fine. And once again, head in the sand, because that's easier, right? That's the path of least resistance. And, it's scary to just leave and to do it quickly. Do you have a go bag, Nate, by the way? Or no?
No. Yeah. I mean, maybe we should. I don't know. I
think
frankly,
you should.
Yeah.
We have go bags, and it's something that, we thought through, like, because in New York, there have been situations, so like obviously 9/11, where you think about like, what happens if I need to get out of here? What happens if I need to get out of here on foot? Hurricane Sandy, we lost power, had no cell phone reception. So after those experiences, I have thought a lot about, go bags and the fact that this is something that you just need to be able to grab. And it should be light, right? There shouldn't be too much in it. Mine is like passport, copies of documents, cash. It's really important to have cash, even though we're turning towards a cashless world. But if there's no connectivity, if you can't use Apple Pay, if shit goes bad, like cash is actually an important thing to have. Laptop, right? When my apartment, was threatened by fire, last year, I grabbed my notebook because I write all my first drafts by hand. And I don't, that if that's lost, like, huge chunks of my next book are lost. So I grabbed that, laptop, passport, and you're out of there, cell phone. But I think that it's important to just figure out what are those things that you need immediately and also the things that you can't replace, right? Like if you have photographs, I have my grandmother's letters to her sister, which are, handwritten. It's their correspondence, and it's, the only thing I have left of her. So like I would grab that, even though it weighs a ton, right? It's not a life-changing thing, but to me, it's something that like I could never replace, and that's really, really important. So I think that there's like a balance of obviously water, some bars, but you need to replace that stuff, right? Like some stuff goes bad in your go bag, you need to replace it constantly so that it stays fresh. And so it's a little bit of a pain in the ass, but once you have it, it's pretty easy. Oh,
yeah, I guess our main risk in New York is probably a terrorist attack. I mean, because with the hurricane, you have some warning time, right? I mean, you can get severe summer weather in New York. The winds are, but yeah, the main risk, if we're being honest, is like some terror attack, and the fact that I live in Manhattan, right? You're kind of on an island, right? There's only so many physical ways to like connect with the rest of the United States, right? Yeah. And so that gets a little bit frightening, I suppose.
Yeah, well, one of my friends who lives in Tribeca, actually, after Sandy, they ended up buying one of those like inflatable boats, so that they could.
Gosh. Okay. Yeah.
Because also thinking about terrorist attacks, like what happens if all the roads are closed? So they like bought a little inflatable raft that they can take to the Hudson River and get out of there. And at first I laughed, and then I was like, should we get one of those, right? Like, how far do you want to take this? And obviously there's like there's a full spectrum from no go bag whatsoever, I'm totally fine, to prepper, right? And I've got a bunker that I paid for that I'm going to go to, and like I know exactly, off grid what I'm going to do. So there's a whole lot of room in between, but I think that doing the bare minimum is a good thing to do. It's just that to me is like where I come out rationally. I did not end up buying an inflatable boat, by the way.
You didn't? Okay.
No. I did not own
Maria,
an
that seems
boat.
a little nitty. I don't know.
Yeah, so I do not have an inflatable boat. By the way, that friend moved from Tribeca to LA and had to evacuate. Was in one of the evacuation zones. So the inflatable boat is not very helpful over there. So I think that these are all important decisions, something you have to think through for yourself, but it's something you do have to think through. I just want to like make one last push. People do like to ignore things that are scary, that are inconvenient, that forces them to make difficult decisions. Don't do that, right? And instead, like, actually sit down and do a rational calculus, look at the numbers, look at the risk, and try to figure out if it's worth it or not.
Right,
and,
you don't have to make a commitment.
Right.
You could say this is silly, the risk is low enough, and we're probably fucked anyway, or whatever, right? You can do that calculation and then decide not to, right?
But at least do the calculation, please. So we got a listener question from JM, and Nate, this listener question is directly about your work. Right?
Yeah, so Elon Musk and Vivek Ramaswamy, is that how you say it, right?
Yeah.
Are meeting with top government officials, and they also are trying to kind of formulate this quasi-official agency called DOGE. It's a acronym for Department of Governmental Efficiency.
And also a meme coin.
And a meme coin. Elon's favorite meme coin, I think. And the question is, how do you integrate the river and the village? So if you have not read On the Edge, The Art of Risking Everything, published in 2024, but these are my terms where the village is the East Coast establishment, risk-averse government, at least when Biden's in office, right? Government and academia and media, right? These are the people who were super concerned about COVID risk and other types of risk, and they're the ones who are doing more speech policing and things like that, right? I mean, they're kind of become like the liberal establishment, the expert class, right? Whereas the river are the risk-taking degenerate types in finance and Silicon Valley, as well as the poker world and the gaming quote-unquote world more general. But parts of the river have had an increase in their political power.
Typically, government seems more villagey, right? Old establishment, et cetera. But people like Musk and Ramaswamy are more from the river and are trying to inject some of those ideas into kind of old Washington. So how does that play out? How do we integrate the two together, right? How do you make the two mesh, and how do you actually make it a productive thing as opposed to, two sides entrenching against each other and polarizing even further, which is obviously one possible outcome.
Yeah, I mean, look, there's long been a conservative critique that there is a lot of waste, fraud, and abuse that taxpayers are on the hook for, which I'm relatively sympathetic toward. So, I guess one critique I would have, and you see it in like this LA wildfire stuff, right? Where they'll make 5 accusations about how it's all the liberals' fault, right? And I'm no fan of Gavin Newsom or governance in California in general, right? But then you actually kind of check these and maybe one of the 5 is basically true and one of the 5 is half true and the other 3.5 are just deranged, right? There's a big deal about the LA fire chief is a lesbian and somehow this is a DEI thing somehow for reasons I don't entirely understand, right? And you hear claims about where our water takes. I guess there is one water take in Pacific Palisades that was up for repair, right? That seems not good. Seems like you probably want the repair time, to be quicker than, we'll get around to it at some point. But if you go and scrutinize his claims, Noah Smith, the writer, the blogger, has a good rundown. And again, there are elements of it that have some degree kind of truth, but it's not very precise, right? Mm-hmm. And, there is this duality in the river, the way I conceive it, where on the one hand, the river is supposed to be kind of like the Moneyball-ization of everything, where it's calculating and precise, right? On the other hand, there is this degenerate gambler side, and Elon in particular is someone who, look, you got to hand it to him. He's founded all these amazing businesses. He's clearly doing something right, including, by the way, being a co-founder of OpenAI. But not a guy who you'd say has a lot of precision, really, right? and the giddiness of someone who's on a winning streak, right? They not only have won in all sorts of ways in terms of becoming wealthier and wealthier, right? But also now this faction of the river, again, I think the average person in the river probably is a moderate Democrat. But this faction has just had this kind of gigantic win, clearly. They were backing Trump, and clearly they're going to have, I think, a fair amount of influence on Trump. It's already also bolstered Elon's net worth in certain ways, right? Even without kind of alleging anything untoward, right? His businesses are all subject to regulation, and if you have a more friendly regulator in office, it's probably worth something to you. So it's been disappointing to see this side of the river become the side that won, I guess. But look, it's one message of the book is like, these people are actually not so rational necessarily, right?
Yeah. No, that definitely is a message. And I think that from a psychological standpoint, you also have hit on something that is really important to remember as we see kind of these Riverians making their move on Washington, which is there is a hubris that comes from being on a winning streak, right?
Oh, yeah.
And that definitely makes you irrational, like that irrational exuberance, right? And a lot of bad shit happens from that. And to bring it up back down to kind of the poker level, right? Think about poker players who are on a hot streak, right? Who are running well, who are sun running in poker terms, and then they think they can't lose. I'm not gonna mention the name of this player, but there was a player who went on this incredible streak a number of years ago, and like just would win everything, and ended up winning, a shit ton of money and just like couldn't lose. And people were like, oh my God, this is like the best player in the world. And then the sun run ended. And I remember one specific stream, this was televised, where this player lost not even a flip. Like it was just like lost an all in and was behind and stayed behind, didn't hit the miracle card, had always hit the miracle card in the past and was, just expecting it to happen. And it didn't. And this was a huge hand, and he was out of the tournament. I can say it was a man, right? Because we know that 97 to 98%
Why can't you mention the name?
players,
Why can't you mention?
I don't want to put them on blast right now.
Okay.
But this is one of the maybe another time. This was one of it was an epic meltdown. This person got up from the table and threw the chips, just threw the chips at the other player and at the dealer and stormed off. And I was like, holy shit, right? Like this is someone who is not used to losing. And when you're at a poker table, you can watch the stream and laugh and be like, haha, right? Sun run over. And you do not, your mental game, because this person also prided themselves on good mental game, mental game non-existent, you've just been winning. But when that happens now, let's go back. When that happens in Washington, the stakes are much higher than, throwing chips at a player, which by the way, if you play poker, big poker no-no, you never throw your chips, right? That is a big etiquette no-no. Chips should never fall off the table. Do not do things with a lot of force. Just be nice about it. Splashing the pot, not good. When that happens in Washington, consequences are much more dire, and it's no longer quite as amusing. So when I always say, beware people who've been on huge winning streaks, right? Their decision-making is going to be colored by that.
American or Euro? Can you say that much?
Euro.
Okay. The Euros, I don't know. The Euros kind of believe in luck. They're a little superstitious, I think, right? They seem like there's some rational.
There's a rational superstition, I think, in a lot of Riverians, right? A lot, and I don't know about Musk. I don't know if he has irrational superstitions, but a lot of people who are Riverians and who are kind of these gambly types and who do think about risk, they also are superstitious. And I just find it amusing and also, sometimes disappointing. And some people are aware of it. Like Ike Haxton, in the Biggest Bluff, I have a section where I talked to Ike about superstition, and he fully owned it. And he's like, yeah, I know this is totally irrational, but I'm going to do it anyway, right? I'm going to have my rituals, etc. But then there are other people who are like, no, I'm not superstitious at all. Oh, yes, this is the same shirt I was wearing from day one of the tournament because, I've been running well in it, but no, I'm not superstitious at all. But I think that's Ike's perspective, that it can't hurt, right? It's probably, it's bullshit, but can it really hurt? And my argument is, yes, it can hurt, because when your rituals, when your superstitions are disrupted, it can actually really fuck with your mental equilibrium, right? What happens if that lucky shirt that you've been wearing every single day, suddenly you can't find it? Or if you're staying in a hotel, it got lost somewhere, housekeeping took it, and then suddenly, you have a day 4 restart, day 5, you're deep, and, you're thrown off by this. And I wrote about this, but it's happened to Olympic athletes. There was one Olympic athlete who lost her lucky necklace right before a run, and, just completely fucked up her run, right? So, yes, there is a downside to this. It can hurt, because when you're kind of reliant on that, it can be really difficult to kind of to move past it. But I think this is a good way to wrap up the show, because in some ways, like, there have been some themes that have gone through all of our segments today, from fires to now. One of them is kind of the irrational exuberance and people not making correct decisions because they're a little bit overconfident, and misperceive risk, whether it's risk of fire
we're a quarter of the way now through the 21st century. I'm getting that right?
Yeah, we are. And
irrational exuberance is still a thing, I'm sorry to report.
It absolutely is, and I think it's here to stay. And on that note, Nate, get some rest. Let's get over your jet lag so that you're fully awake, and we will see you all next week, where Nate will no longer be in a time zone that he doesn't even know what time it is anymore. So we'll see you next week.